so we had an initial down move with the stock market, then the bonds blew up, and then of course the bonds kind of backed off a little bit and as the market backed off. So in this whole event, if you start out with $10,000, you got down to like 8,900, which is down like 11%, which is your maximum drawdown. We had a bit of a spike here, went right back up and went down. You know, I could take money at this point if I was a trader, and this was my cash account or my parking portfolio, as we call it. I'm parking money till I get an opportunity to use it. I could basically clean this portfolio out or part of the portfolio out and throw it into, you know, equities, companies that are priced well, companies that are positioned to do well during the recovery, or just into the S&P 500 for that matter, and take advantage of the gains coming later. This is about building wealth, right? This isn't about trading one, you know, short term. This is about building wealth.